Good afternoon, everyone. I, Sanya Singh, on behalf of NEN and Vadvani Foundation, would like to welcome you all for this webinar. Safeguarding the fruits of your grey matter has been a bone of contention for many creators. Intellectual property is a touchy subject and there are many different views on it. However, if you seek to safeguard the fruit of your labor, then we have one such inspiring personality with us, Ms. Swapna Sundar, who is the CEO of IP Dome and IP Strategy Advisors, a Chennai-based boutique firm specializing in IP strategy. She has a postgraduate diploma in patent laws from the Nalsar University of Law and an ML in International Economic Law from the Brussels School of International Studies, Belgium. She is also a regular faculty for industrial property law at several institutions. Now, before I hand over the floor to Swapna, here are a few reminders for the audience. You will be on mute. You may ask a question by typing in the panel provided, or if you wish to speak to the speaker directly, then you may click on the raise hand button. You will be provided the audio access only when Q&A session will begin towards the end of the session. Kindly maintain a list of attendees of the session and share with us. Also, please ensure to share the feedback of this session with us once the webinar is over. Over to you, Swapna.
Thank you, Sanya. Happy to be here. And I have about 30 minutes to do the presentation. And I'm going to look at some of the basic reasons for why startups should register various entities and various aspects of their business. And what are some of the advantages of doing so. The areas being covered are what is the importance of registering a startup, some of the benefits, a few slides on the process of registering a startup, and some advantages and some common mistakes that startups may make. So to understand a little bit more, what is registration? So we often use the word registration in context of land deeds and intellectual property registration. So actually, registration is merely the act or process of entering some information in a public record system. The registration of the document that shows that the registration has been completed is also called registration. For instance, you say registration of a vehicle. Registration also provides conclusive proof that the documents submitted are genuine, and there is some formalities for due diligence which have been conducted on that. Moreover, those documents which are registered are saved and archived to prevent fraud, and in cases where the originals might have been lost or destroyed, registration provides the required replacements. In addition, registration departments are a large source of revenue to the state. This means that apart from taxes and excise and so on, registration also brings a lot of money. You may recognize this in the context of intellectual property, where patent registration or trademark registration costs some money. Apart from this, and this is something that many people think of as an advantage or a disadvantage, as you please. Once you are registered, you are under the supervision and regulation of some governmental authority. It could be the state government, it could be local authority, or it could be the state government, or it could be the central government. And these governments try to ensure that there is proper functioning both in the interest of the stakeholders within the company and any third parties that may be engaging with that entity. So why should you register? In fact, the tagline of the Government of India Ministry of Corporate Affairs makes a lot of sense. It empowers business and it protects investors. In addition, it also protects the third parties that interact with the company. How does it empower a business? By creating an entity around the person doing business or committing to a group of people, it ensures that the relationship between the people who own the business is fair and that it is equitable and there is no conflict between who owns the company and things like that. I might have a couple of examples as we go along. And when you are an investor, you know what you are investing in, whether you are lending to a proprietor or lending to a person, or whether you are actually investing in an entity and you can see some return on investment. In fact, the latest venture of the Indian government, the Startup India program, ensures that only startups which are registered in appropriate ways can benefit from Startup India. So if you look at this flowchart here, in order to be eligible to some of the benefits, particularly the tax benefits under the Startup India, it must be a private limited company, a limited liability partnership, or a partnership firm. The startup should not be more than 5 years old, and its turnover should not exceed 25 crores. Further, it should develop an innovative product which should add value to the customer and should be a commercial product. If you see here, a service outcome is not contemplated within the Startup India eligibility criteria. But more importantly, the startup needs to get approval from the DIPP that the company is innovative. This is going to be a tough call. The ease of doing business in India index puts us very low on the list, and I'm sure that not having the right contacts could delay this process considerably. So only if you meet the first 5 conditions at any one of the F series, then you will start to benefit from Startup India. So when we talk about registration for startups, there are different types of registrations that we talk about. The first is registration of trade. This in Tamil Nadu is not mandatory. In Tamil Nadu, the Shops and Establishments Act does not require registration of trade. But in other states, and there are different provinces in different states, there is a registration of trade. It's also called a Gumasta Dhar license in some places, and in other places it's just called a trade license, like in Bangalore. So this trade license is administered by the local municipal body, and it requires that every trade be registered, whether it's a shop or a startup. Secondly is the registration of the entity, that is the people who are coming together to run the business. And this might be in sole proprietorship, it could be a registered partnership, it could be a limited liability partnership, it could be a private limited company, or it could be a one-man company as well, or a one-person company as well. There is also registration of property, like transactions on rental property, or it could be sale or buying of property, or registration of any of movable goods, particularly like cars. And finally is registration of intellectual property. And in registration of intellectual property, there may be many categories, and it depends on what your business is. For instance, if you are an FMCG company, you might want to register your brands first. If you are a tech-led company, you might want to register your patents. If you are a company that's working on goods and designing, then you might want to go in for a design registration or a copyright registration. Or if you are going in for proprietary formulae like recipes and medicines which are proprietary but not patentable, then you might want to keep them as trade secrets. There is no trade secret registration in this country. Different types of entities that are available for registration in India are sole proprietorship, which is actually just one person running his business or her business, and then a partnership firm, limited liability partnership. Both of these require at least 2 people to be partners. Private limited company. There is a further registration under the MSME Act, that is the Micro, Small or Medium Enterprises Act, which requires that once you are registered as an MSME, you might get certain benefits, like you could reach out to the Facilitation Council when you're not paying. So an MSME, under the MSME Act, payment rules are very strict, and if there is a vendor or buyer who has not paid you, then it is necessary for them to have paid within 45 days of raising a notice or raising an invoice thereto. And if they fail to do so, and you are an MSME, you could go to the MSME Facilitation Council. So registering as an MSME is very useful if you are an MSME. Again, you can register yourself as a society as well, but society is not a typical entity for running a startup. It may not fit your purposes if you're running a commercial enterprise. However, if you are running a social enterprise, a society may be useful. Some of the advantages of registration. You have an independent corporate existence. What does this mean? This means that any one of you can represent the entity. For instance, when there is a banking requirement or where there is an accounting requirement, you need not have all your members come there to sign a document. The entire entity is represented as one entity or one person, and many of the laws which are applicable to persons are also applicable to corporate persons. This means that your company will be treated as a person in the eye of law. More importantly, there is limited liability. This means that if your company, for whatever reason, has been wound up or has gone bankrupt, then your creditors and your vendors are not going to come after your personal property. They will have to limit their compensations to what the company can afford. Of course, at certain times and under certain conditions, they can lift what is called the corporate veil and ensure that the stakeholders pay out. But in general, the liability of the company is limited to what is owned in the capital of the company. There is perpetual succession. This means that when one of the company members retires or passes on, the company continues to act. This is both an advantage for the other members in the company as well as the third parties that interact with the company. Whereas if you take a sole proprietorship or an unregistered partnership, then it is likely that when a partner dies or the proprietor dies, then the company ceases to exist. The capital of the company, the assets of the company are all in dispute and conflict at that point. There is the possibility of transferring shares in a company. This means that you can actually get investors in, and we will talk about this a little further on. Companies can also own separate property, or LLPs or registered partnerships can own separate property from what belongs to the directors or stakeholders or shareholders in the company. This means that the company can own property from which it can pay the creditors or debtors, and it can also pay the vendors if at any time the company is not able to pay its dues. The company has capacity to sue as a person. It means that all the directors don't have to come on board, but the company will be represented by one of the directors and it will have the ability to sue as a person. There are several tax savings also, particularly in income tax, and other types of taxation issues are much easier when you are a registered entity. Very often I come across startups saying that registering an entity is a disadvantage. And these are some of the things that they cite. They say there is a lot of formality, there are expenses, compliances and legal formalities are time consuming. There is government supervision and taxation net is formed around them, and there are labor and personal related rules which they do not want to follow. Now, are these strictly disadvantages? Let me give you an example. One of the startups that we are working with wanted to actually file a trademark and get their brand registered. The brand was growing quite fast within the city, and they knew that if it proceeded at that rate, there would definitely be infringers in the market very soon. But having made that decision, they then realized that the value-added tax on branded goods varies between 8.5% and 12% across, or 12.5% across the country. This meant that the cost of the product would have to be that much higher, and this they felt would be ruining their competitive advantage in the market, which was price-based. Now, is that strictly a disadvantage? The way I would look at it is in this way: if the startup is ambitious, if it is looking forward to grow, then it should be willing to take on board these pricing strategies to ensure that the brand grows. As the brand grows, the product is definitely going to reach a wider market, and along with the brand communication, the market will increase and formalize. So, however, this particular startup decided not to go ahead at this point, but to consider branding at a later stage. Let us look at yet another aspect: labor and personal rules. Very often I find startups saying that we are not going to register because we will then have to pay PSI or PF or certain other formalities will come in with, say, Maternity Benefit Act or rules relating to leave and holidays. Now, the way I look at it is these formalities and compliances are put in place so that governments are able to regulate labor laws, they're able to regulate the way employees are used. And if your employees are happy, you are definitely going to have a quicker growth. A committed workforce is going to help you be loyal to you, attrition rates will be low. So while this appear at first breath to be disadvantages, I would say that if you're looking at the long-term run, you must definitely go in for some form of government regulation and registration. The next 3-4 slides would be a little content heavy, so we can definitely come back to it if there are queries relating to them. But very basically, a partnership firm starts when 2 or more people get together and decide to run a business in partnership. They would have to choose a firm name, and it's very good to do a very tight due diligence on whether the name exists already. Look online, check out the domain, whether there is the freedom to operate in the market. Ensure that your competitors don't have similar names. See that your trademark, your name can also be protected as a trademark. Do study the trademark laws before you choose a partnership name. Thereafter, you register the partnership firm. An unregistered partnership has certain disadvantages, but it is necessary in the case of an ephemeral partnership, something that comes together to do a very small project, and then again the partners quit the partnership firm, then it's not necessary to register. Hindu undivided families are normally not registered. But in other cases, it's always advantageous to register a firm, particularly if you want to persist in the long term. Limited liability partnership is fairly new. 2008 was the act was the time the act came into force. As of this year, foreign investors are allowed to also invest in a limited liability partnership. It is a very good option, I feel. A minimum of 2 partners are required, and the process is quite similar to registering a company. So if you are intending to eventually convert your LLP into a company, you might want to go directly into a private limited form rather than start off with an LLP and then move into a private limited format. A private limited company requires a minimum of 1 lakh share capital and requires at least 2 directors. A 1-person company also requires a minimum of 1 lakh share capital, but 1 director is quite sufficient. The current private limited registering process has been streamlined to a great extent. Dealing with the registrar of companies, that is the ROC office, is quite simple. If you look at the website, they give very specific timelines, and in our experience, they do hold on to that. It helps to have a chartered accountant or a lawyer do this for you, because they know the people involved and they know the small nitty-gritties which may be a little difficult to follow the first time around. The drafting of the Memorandum of Association is quite critical along with the Articles of Association. You might want to work with your chartered accountant and your lawyer to see what different things may go into that. If you are planning to extend your business activity to a whole range of surrounding or peripheral activities, it might work to put it in the MOA at the first instance rather than having to amend it over a period of time. When to register? When to register is a very important question for a startup. Should you register as soon as you have a great idea? I would say no. I would say the best point to register is when you have a scalable business model, a viable business model. A mere idea or a mere friendship related agreement need not be registered as an entity. So if you have a scalable idea, you have a scalable business model, then do go forward to register. You need to consider the risks which you are going to take, and based on the risks, you have to choose the entity that will best protect you personally. So as soon as you are about to have any of the following: a partner, an employee, an investor, a paying customer, a fully paying customer, a grant from any government institution or any private funding agency, a bank account, or any intellectual property, including trademarks, any potential liability that you might be facing, or any assets that you might want to buy for your company, it's time for you to register therein. Let's look at why you have to register. The first aspect is that within the partners or directors who are forming part of the company, it is important to have an understanding of the extent of ownership of each partner. It may be that there is a major partner and a minor partner. It may be that there are several partners, some of whom have a higher stake in the entity or who have a higher investment in the entity. So it's always good to have clarity over the ownership of the entity. Acceptance of investment in a private limited company. As of now, any foreigner can become a shareholder easily in a company. And as I was saying, recently the restriction against an LLP receiving investment has been removed, but the restrictions continue in certain formats. But a foreigner can definitely become a partner in an LLP. An investor always likes to invest in a business in lieu of some stake. And unless you have a private limited entity, you can't offer stake. Whatever investment will be treated as a loan. Therefore, it makes sense if you're looking for investment or funding to have a private limited company. Again, if you're getting in high value employees to whom you can't pay the full value of their salary, let us say that you're a company and you're getting a design architect, and the design architect in the market charges about 7 to 8 lakhs per annum, which you cannot pay, you might offer stock options to such a person to keep him on board. It might be 1% or 2% of the company, but it will definitely become valuable to the company. It will be as he stays in the long run. If you're planning to go public in the future, then it's easier to convert a private limited company into a public limited one than to convert a partnership or an LLP into a public limited company. It is therefore, if you are planning to stay and run in the market for a long period, you're looking for going public in the future, then it is important to have a private limited entity. You can also choose to be a one-person company in the initial stages, but and it's easier to convert it into a private limited one, which means by adding one or more directors, you can convert yourself into a private limited company. So these are normally the reasons why you would register a startup. I would consider the investment aspect probably the most important and the stock option aspect as well, rather than just to create credibility in the market. Although a private limited company or a registered partnership does definitely have better credibility in the market. Your customer knows you better, your banker knows you better if you're a registered entity than if you are an individual. Some common startup mistakes that people might make. Raising your seed capital without a competent legal counsel. I have found that startups often worry a lot about salaries and fees and professional fees of the consultants and lawyers whom they engage with. It is true that lawyers are expensive. It is true that consultants and IP lawyers and IP filers are expensive. It is professional fees of such persons is commensurate with the work they do and the value they provide rather than the number of hours they spend on it, at least in India. I know that in the US and Europe they do charge on an hourly basis along with a value basis, but it is not advisable to go without legal counsel. The only thing I can tell you is if you find the appropriate legal counsel, someone who's used to working with startups, someone who's used to working with small businesses, you might find that they are willing to understand your cash crunch and in fact support your cause in the long run. The second problem may happen when your co-founders don't really understand how the system works. I worked with a startup, a dance school as a matter of fact, which had 3 dance teachers who came together to teach Western dance forms in Chennai. Eventually, we found that there was only one person who was very popular with the students, and the other 2 were very good supporting dance teachers, but one of the others was very good at managing the business. Now, it so happened the dance teacher who was very popular tried to argue that his share in the company was bigger. So when the time came to formalize the process, there was a lot of conflict and eventually the company broke up. So having a clear understanding and with your co-founders is very important. A lawyer or chartered accountant will definitely be able to help you out on this. And if your co-founders are not willing to understand or are not willing to cooperate, then it might be better not to go along with them and to choose another appropriate person or persons to work with. Choosing the wrong organizational model. So a partnership firm is a very good option if you're setting up a small business. You intend to remain small. You don't really want anybody else coming in. But if you're looking for investment and you're looking to grow the company and eventually you're looking to take in a number of different directors and do peripheral activities, it is definitely important to have a private limited format. Having chosen a firm structure, converting it into a private limited structure might cost money, and it might also cause conflict within the organization. If a partner believes that there will be no other partners or directors, and then you intend to bring in a few more, you might have problems within the organization. Lack of employment documentation. Very, very often I find documentation is very poor in Indian startups. Not just in startups actually, as a matter of fact. Not knowing how long your employee has worked with you, what his conditions of labor are, ensuring that the employee knows that there are certain things that are private and confidential, certain things which cannot be discussed outside the company, ensuring the loyalty of the employee by preventing certain types of access to documentation or being able to rely on your employee. All of this can be enabled by proper documentation. And documentation is not just contracts of employment, but also policy manuals, documentary manuals that you have, processes of working, standard operating procedures in your company. All of these will make a big difference to your long-term sustainability. A standard form of contract with customers and employees is equally important. If you're a professional, your professional organization like the Bar Council may already prescribe a standard form of contract with your customer, client, or employee. But if you are not, and you're setting up an IT company or you're setting up a textile unit or a design company, then having a standard form of contract will ensure that there is credibility and there is certainty. For instance, the employee will know what is expected of the customer, and the customer will know the standard of service or professional commitment he can expect from your company. Not protecting your intellectual property. Perhaps this is one of the fatal reasons why startups may not succeed. Investors are very interested in valuation that comes from intellectual property, particularly companies which do not have great assets in terms of plant or machinery or in terms of personnel. Intellectual property could sustain your valuation. I know for a fact that from startups where 2 or 3 co-founders come together, one of them is the techie and the other is not, and a third person who might be a management professional, not knowing what comprises the intellectual property in your company may be a problem. Only the techie may know only the technical aspects, your finance person may know only the valuation, and your management professional may only know how to run or the operations of your company. In such cases, it is very important to probably understand and do an intellectual property audit of your firm. Your intellectual property may not be just what is openly visible to you in terms of trademarks and designs or patents, but also the way you do your work, the way you manage your customers, your operations, and so on. Coming up with the name of a company that has trademark issues. Me Too companies which have similar business models often tend to have similar trademark suggestions. For instance, I had a client who wanted to know if instead of WhatsApp, he could start a company called WhatsApp. Definitely, it will face trademark issues. The ROC may not accept the company name, but even if he goes to market, there will be serious infringement issues before that. Not taking into account important tax issues, please do hire a good chartered accountant, engage the services of a good accountant within your company and outside. Ensure that you are financially clear about what your tax liabilities are. Pay your taxes on time, otherwise it could prove very expensive. Not having good terms of use agreement or privacy policies for websites. In the e-commerce domain, this could be real danger. Terms of use agreements, I know that you can pick them off the net and then customize for use, but it's always a good idea to have it vetted by your lawyer or chartered accountant before putting it on the website to see that you are covered. So we have been working with startups for the last 10 years, and in the last 5 years I've been in the journey, and we have found that India is definitely growing in terms of technology-led startups. We are happy to be partnering them in their initiatives. In this context, we also have the IP Smart Workbook, the Lab to Market Guide to Inventing, which you might consider buying and reading because it has a lot of information on how you can take your technology to market. So if you have any questions, I'm open to questions now.
Thank you, Swapna. We'll start the Q&A now. So we have a request from Mr. Manmeet Barve. If you could talk about the cost and timeline of registration for student startup and how can the student bootstrap the same?
Yeah, thanks, Sanya. What do you mean by, can you just repeat
Sure.
the cost and?
The cost, and if they want you to talk about the cost and timeline of registration for the student startup and how can student bootstrap the same?
Okay. As of now, there is no special category called student startup, and every startup, whether student or otherwise, has to pay the same amount of money. I can tell you from my experience that to set up a private limited company with a 1 lakh share capital and 2 directors will cost between 20 and 25,000, and the process is closed in about 1 month. I mean, this is practical. How can you bootstrap it? I have to ask my colleague. One of the ways that you might be able to do this is by doing it yourself, I guess. But if you go by through your chartered accountant, it should cost you about 20,000 rupees.
Okay, should we move on to the next question?
Please do.
Okay, so the next question is, most of the time it is the auditors who misguide the startups to avoid taxes and they suggest the wrong type of company. When it comes for VC or angel funds, the status of company creates problem.
Yes.
If you could talk about that.
Okay. I don't want to comment on the misguide because chartered accountants do wish to, I think they are trained by their professional, how do you say, professional colleagues and seniors to reduce tax liability. So it's not that they intend to misguide, I wouldn't say that. I think that they are used to working with larger entities who are able to manage tax avoidance issues and taxation issues in a better way than startups. In my opinion, a startup should just pay up all their liabilities. They should not try to avoid tax, at least for the first 5 years. And a private limited company does have tax liabilities. If you come within the service tax bracket that is about 10 lakhs, then you definitely have to pay service tax. And startups whom we have worked with, we always say pay all your taxes and show a proper regular functioning of your company. Investors are definitely looking at companies which do their work perfectly. As far as reducing your tax liabilities is concerned, I think that that must take at least 5 years or 6 years to be put in place. And then you can start looking at legitimate ways like corporate social responsibility rather than to avoid tax. I think India is a very nice country to do business. Of course, it may not be the same opinion as what some of the other investors from other countries have, that India is a difficult country to work in. But I think our consumer is growing, our consumer awareness is growing, and I'm sure that they will not mind paying additional service tax or VAT for a good product that really improves their quality of life. That's, yeah.
Okay, so the next question is from a 21-year-old BTech final year student. He says, me and my family have been planning to start a manufacturing company where we will be selling directly to the consumer. We want to keep the company within family control, but for it to grow in the next 5-10 years, should we go for a partnership firm or a private limited company?
Okay. If the family is a Hindu family, right? It's one of the very good options is to go in for a Hindu undivided family format. It is, it keeps the family together. The formalities are not so much, and if the family can work together, then it's really a good option. Otherwise, yes, you might have to go in for a partnership at this point, like a holding company. And then later, as your brand grows, you can spin out a private limited company. The suggestion I would have is to start with a partnership firm, which is within the company and within the family, and then to go in for a company where you can actually get professional managers and CEOs and so on. The intellectual property assets can still be held by the family firm, while the operations are managed by the private limited company. Many of the bigger firms in this country are doing that. Like Tata and Sons is still a firm, but then it's a holding firm for all the intellectual property of the Tata Group, which consists of many private limited companies. So that option is always there. It's not necessary that there should be only one entity. It's definitely not necessary. You can spin out many different types of entities depending on your requirement.
Yeah. Okay. Should I go over the next question?
Yes, please. Next.
Okay. The next question is, are there any specific platforms, websites to visit for trademark issues and domain name, etc.?
The Indian IP site, the IP, it's ipindia.nic.in. So the ipindia.nic.in website will guide you to the trademark registry, and you can do a public search or a public status search on the trademark registry website. It's a good website. It's quite thorough in terms of trademark. Other than that, there are private agencies who can do a trademark search for you, or your lawyers can. I mean, if you are IP lawyers, you are engaging IP lawyers, they can do it for you. There are also trademark agents who might be able to do it for you. But I would certainly suggest that at the first level, please go into the IP India website, the trademark registry, look for public search, and you should be able to get most of your first level answers on that site.
Okay.
Next question.
Okay. Next question is, we are in process of setting up a travel business, LLP or PLC, which is a better option?
Okay. If you're planning to grow, in terms of getting new directors, getting investment, like Make My Trip or something like that, you're trying to grow it, go online, go global, get investments in lieu of equity and private limited company. If you're planning to have a more family held or group held entity, which is held by the same people until even when it is quite big, then it has to be a partnership. It could be a partnership. Yeah, if you're looking for outside at some point to open it out into the market, it has to be a private limited company. If you don't intend to do that, and in the foreseeable future you think you would be growing within the group whom you have worked with, then you can remain as an LLP.
Okay, the next question is how does tax policies declared by the government in Startup India, Stand Up India is advantageous for
Yeah.
new startups?
Oh, this is controversial. Um, okay. Like I showed you in that flow chart, um, it appears that many of the bootstrapping startups will be ineligible to take advantage of that. Because it requires you to have quite a consistent legal and other support, and you will need to show that you have technology which has been registered and then certified by the DIPP as innovative, and it has to be innovative in the product category which adds value to the society. It should be a commercial IP, commercial facing IP, and then it has other requirements like it should be a private limited or LLP company or partnership. I feel that if you are a bootstrapping entity, you would become eligible for startup benefits in about 5 years. I would not suggest, not it's not a suggestion. The idea would be that don't expect the tax concessions in the first year of operations. It should be, I think you should start working on that in about the third year to the fifth year. Now, the other problem is that the benefits do not extend to companies that are more than 5 years old. So I think the suggestion would be to build towards eligibility and start attempting the access in about 3 years. That would be my current strategy. Yeah. What do you say, Sanya?
Sounds great. Okay, ma'am. So the next question that we have is what
Yeah.
sort of taxation are we looking for if we register a PLC now under the Startup India scheme?
Taxation. Um, Again, see, the eligibility criteria are slightly, let me see if I can go back to that slide. Yeah. So if you look at this, the taxation aspects will depend on whether you are closing all of these different requirements, right? So, okay, if you were asking me for consultancy advice, I would say just start your business, keep working, and at some point when you see yourself closing these eligibility criteria, then start applying for them. Because I think that if you start considering taxation at this point, you might not actually cross the taxation limit. What do you think? You might not actually be crossing your taxation limit for at least the first 2 years. So I would think it would be getting ahead of yourself if we start looking at tax concessions. So these Startup India, I think it applies very well to what do you call them, incubated companies. Yeah. So companies, let's say that are being incubated in IIT or IIM and who are getting a lot of money in the first 1 or 2 years, they would be the companies that would strictly benefit from Startup India. So it looks to me. There is a lot of analysis that is going on about Startup India. We don't yet know how it's going to operate. Your story has carried a couple of very good, not just couple of, several very good write-ups on how you can access these grants and whether there is some deficiency in the Startup India plan, action plan. So yeah, as of now, I would say just go ahead and do your business, build a scalable model, build your market, reach out to your customer rather than thinking about taxation. That, that's what I would say, Sanya.
Okay. Thank you, Swapna, for the great session, and thank you to all our attendees for participating in the webinar. We are glad that the questions kept on coming in, but due to lack of time, we are unable to answer them all. Please do send in your feedback to us on the shared link. Also, if you found this session interesting, feel free to blog or post about it. The recorded version of the webinar will be available on YouTube shortly at eClub NEN Online. We will share the details of our next webinar very soon. Thank you once again and have a nice evening. Thank you so much, Swapna.
Thank you, Sanya.